So what can we expect from the market for the rest of the year? We're joined by Sandip Bhagat. He's the Chief Investment Officer at Whittier Trust. Welcome. Nice to have you here.
Great to be back.
I see from these notes that you're looking for a continuation of the rally, but a more modest move in the Dow. Is that a correct read?
That is fair. And the biggest development in recent weeks, Sue, is that we have seen a decline in uncertainty and a de-escalation of tensions on so many different fronts. So these come to mind right away. It seems like we will avoid a no-deal Brexit. We seem to be on track for a phase one deal with China by the end of the year. The Fed has clearly communicated where they stand. And most importantly, all those fears about an imminent recession, well, they seem to have receded because growth is still coming in above expectations. And so against that backdrop, I think the path of least resistance is still to march on higher, but it'll be a slow grind, maybe 2-3% more to the upside, which is about 800 Dow points and 85 S&P 500 points.
So you're still sticking with your 3125 target on the S&P?
Yes, ma'am. And it is based really on these key views and assumptions. No recession anytime soon, so none in 2020. We should see a modest pickup in growth, both of the economic and of the earnings variety. Why do we say that? It'll be boosted by all the easing that all the central banks have done. That should begin to pay off. We do see some resolution, partial as it may be, on the trade front, and that should spur growth. And then inflation is muted, and that means interest rates will remain low.
So what areas of the market do you think are still fairly valued and perhaps will retain leadership as the market moves higher?
So let's take this all the way from the top, right? So you have the first big stock bond decision to make. Interest rates are extremely low. They're not justified just by the slowdown in growth. I think investors are seeking safety and liquidity in great doses, and they have overpaid for those. So we think actually that the bond market is overvalued. The stock market is fairly and fully valued.
Right.
So that leads us to picking stocks over bonds. Underneath that, we still like the U.S. stock market a lot more than the foreign stock markets. And then if you had to pick sectors, we would take something more cyclical like technology, consumer discretionary and financials over staples and utilities.
On that note, thank you so much, Sandip. Nice to see you again. Sandip Bhagat,
Likewise.
Chief Investment Officer at Whittier Trust.